I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks. His website is rickackerman.com. He's speaking to us from Colorado. Welcome back to the show, Rick.
Always a pleasure, Jim.
Amazon, for the first time, has topped $1,000 a share. Is this an anomaly, or is it really well earned?
A little bit of both, I'd say. I constantly harp on the importance of Amazon, the stock, but also Amazon, the company. It's to me, it is the single, by far, most important bellwether looking at all of the stocks on planet Earth. Every tradable stock, Amazon is the one that counts. Amazon is the only stock we need to focus on to know whether the stock market as a whole is going higher or whether it is topped or whatever. And the reason is that Amazon is a true brick-and-mortar stock, and there's some irony in that because, as you know, Amazon is putting out of business half of the brick-and-mortar retailers in this country, in the U.S. and elsewhere. But you could get right down to it. It's not some sort of digital will-o'-the-wisp like Uber or a big advertising agency like Facebook or Google. It's a company that sells real things. And so that when Amazon wants to sell them more efficiently to fatten its bottom line, it builds warehouses and it invests in transportation infrastructure. So it is a true brick-and-mortar giant. And that's why I really kind of put all of my focus, or so much of it, on Amazon, which, by the way, just points higher. I do have a target at price target at 1,004, and that's a technical target. Of course, it's a little higher than the magical number 1,000 that will have drawn Amazon stock higher. So we still have a few points to go. Let me give you the exact number here. From this morning's newsletter. I'm sorry, it's 1,000.41. So the stock has been about 79 cents higher than that today, and that's certainly permissible, but it's a fairly important, what I call hidden pivot target, and I'll be interested to see whether it can take it out with the greatest of ease.
Well, right now, Amazon is the only thing keeping the NASDAQ above water today. The Dow and the S&P are below.
Yeah, even Google winds up being an also-ran in the relative strength category. Google is another what I call lunatic stock. It's owned by, it's 100% institutionally owned, and they all, not through conspiracy but through consensus, just kind of stick with it. The idea being, hey guys, if we just keep buying Amazon and Google, we don't sell it, we let it fall occasionally to shake it out. But even Google is lagging Amazon. So it's really institutional mindset that drives it. They all know it's a winner, and they all know that if they hang together and keep throwing money at it, everybody will collect the bonuses next year. The corporate executives of Amazon and Google will get to exercise their stock options. So it kind of looks like win, 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 win. Everybody wins, but we know that ultimately there will be a valuation factor that comes into play.
And when do you think Google will face the music?
When? I wish I could tell you, but there's no question, though, that Google, well, Amazon and Google together, Microsoft to some extent, Netflix, the FANG stocks, as long as they're going up, we're not going to have a bear market in stocks. And, these stocks on bad days are capable of keeping the entire universe of stocks at least buoyant. And it's only when the FANG stocks, well, you have to put it in the context of, if you're asking the question, when will money managers wake up and say, hey, it's over, guys, we're all losers, we're all going to get obliterated, we're going to go down with the ship with the Amazon and Google and these other stocks, but I don't see that mindset changing anytime soon.
We'll have more with Rick Ackerman right after the break.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Welcome back. We're speaking with Rick Ackerman. Rick, going back to the so-called FANGs and friends, is it true really just 10 companies are what are driving the North American stock market right now?
Yeah, and of those 10 really, most of it goes into 6. But they are dragging everything higher, and of course, if you're a student of market history, you know that when the action gets that concentrated, when the leadership is so narrow, it's always dangerous. But we've been, looking at so many things that from a historical and technical standpoint are dangerous, that most of us who have been calling tops for the last 9 years have kind of, we've gotten away from that. And I think it's good to just kind of accept the upward trek of these stocks, the relentless rally for what it is. And I'll stick with my technical targets. As I mentioned, I've got one just a millimeter, micron above 1,000 in Amazon. And I would expect some sort of pullback. But if I don't get one from one of these hidden pivot targets, then it's telling me that that still higher prices are coming.
Now, is it really true with Amazon that it would take you 300 years to get your investment back at how much you get from dividends?
Well, obviously no one's investing for yield these days. The whole stock market has become kind of a momentum play. So yes, even though hypothetically it would take you quite a while to get your investment back on Google dividends, that shouldn't be your deciding factor.
Going to oil trading below $50 as we speak today. Was that OPEC production freeze along with Russia just a lot of hot air and not taking into account that American frackers can almost literally turn the tap on and off?
Well, the thing you and I have talked about for the last couple of years, I've been very bearish on crude long term, but also able to see on a chart that it's going higher, most recently up to around $57 a barrel. But the thing you need to keep in mind is that this bear rally in crude, this dead cat bounce, a very long dead cat bounce to be sure, has been driven by this phony, trumped-up supply-side story. The idea being that when Saudi Arabia and friends collude, that they can somehow suppress supply sufficiently to create a bull market in crude. But, of course, no bull market happens simply because of monopolistic control of supply, especially in a market where the product is fungible. If one producer cuts back, some other desperate oil producer, Venezuela comes to mind, will supply the piece that has been withdrawn by other players who are sticking with the deal. So anyway, we've had this supply side story as though, political, some upheaval or some decision by Iran to pull supply off the market, or chaos in Venezuela reaching the point where it significantly impacts their supply of crude. But none of it has really worked. The Saudis are the only producer willing to stick with the deal, but no one else does. So if the rallies in oil were the real thing, they would be driven by a demand story. In other words, China's economy is starting to heat up. Manufacturing in China is going great guns. And at the margin, China being the world's largest energy consumer, would be driving oil prices higher at the margin. But we know that China has been kind of wallowing in a state of quasi-implosion or recession, and the demand side story for crude just isn't there. So my forecast is that crude will trade. I've got a specific target at 29, but let's just say I think it's going below 30 eventually, and it could go well below 30.
Of course, in Canada, the irony is our dollar is pretty well pegged to the price of crude. So even though when the price of crude goes down, you think gasoline prices in Canada would come down as well. They don't, because we pay in U.S. dollars. And so as our dollar goes down, we pay more for gas, not less.
Yeah, I grew up with, all the comic book ads. Everything you bought said prices slightly higher in Canada, but maybe you guys ought to peg to the U.S. dollar.
Well, I've said that for years. And then that way people like Trump can't say Canada has an unfair advantage because of its low dollar.
Well, you're not completely dependent on the price of oil. Canada certainly has many other resources, but for better or worse, yeah, crude definitely has its impact on the loonie.
We'll have more with Rick Ackerman right after this.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan District of northwestern BC. Check us out at blindcreekresources.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Rick Ackerman. Rick, gold down slightly today, and silver was up. Is that unusual for one to be going in one direction and the other way?
No, they can certainly go their separate ways, and I guess, you get your, the gold-silver ratio goes in silver's favor when you get a little bit of speculative fraud, but taking a couple steps back, we've got anything but. I am bullish on gold right now, and looking at the August COMEX contract, I'm projecting a minimum 13.14. That's about $30 above where it's trading right now. And based on a larger bullish pattern that has been going on since December of 2016, I'm looking at a possible shot in August gold up to, I believe it was 14, let me see if I can get a chart here, about 14.20, well, let's see. I'm going to give you an exact number here, so if you bear with me. All right, but the immediate number for August crude is 13.14. Again, about $30 above where we are here. But this bigger pattern, actually going back to December of 2015, projects all the way to 1464.80. So that's a $200 rally from here, very significant. And the key number there, if you're really crossing your fingers hoping for 1465 on gold, is 1300. The actual the precise number is 1299.10. Again, that's basis August COMEX, and that's what I call a hidden pivot midpoint. And we stopped in the June and the August contract at exactly within a couple ticks. In the case of the June, it was to the exact penny. We stopped at that midpoint, and I would have expected a pause there. And the recent pullback in the August 1216 was what I call a mechanical buy. So gold is on a buy signal, and my target is 1465. So there's a lot of room there, but I'd like to see a decisive pop above 1300. Decisive meaning about $10 or so, or if you give me 2 or 3 consecutive bars on the daily chart that close above 1300, I would say that 1465 target is nicely in play.
Some have said silver is going to be a very hot play because unlike gold, it gets consumed in things like computers and solar panels. Is that a bet?
Well, I think the supply and demand argument for bullion is so lame. It's sort of sad that there are people out there that are banking on it. There was a time when people would look at the use of silver for X-rays, and of course Kodak was a big producer of film. We've gone completely digital, so that was one huge source of demand that was lost. But ultimately, gold and silver are driven by psychological factors, not supply and demand. So if silver were to go into the 40s, 50s, $60 a barrel or an ounce, it would have nothing to do with supply and demand. It would just be representing a change in the state of mind of those who hold silver.
Did you say some people also have been arguing about supply and demand for gold?
Yeah, and there's, I guess, plenty of that, plenty of supply, plenty of demand. But again, I think that the gold, the big moves, the important moves in gold, don't really relate to the sum total of gold usage for jewelry, in electronics and all the other places where gold is uniquely useful. The much more important factor, if you got supply and demand forces pushing gold $10, $20, $30, $50 one way or the other, big deal. It's really the much more important thing is a change in the state of mind that makes it possible for gold to go to $1,400, $1,500, $1,600 an ounce.
Do you ever look at diamonds as a source of investment?
Diamonds are a very fascinating market because for so many years, De Beers brilliantly dominated the market, and they did so. Even going back to the 50s, it was a very long-term strategy of De Beers. They took the really long view that, they put diamonds in the hands of the Queen of England, and they put them around the necks of starlets like Marilyn Monroe. And so we didn't always have this idea that diamonds are forever and that diamonds are associated with glamour. De Beers created that image for diamonds. So, over time, De Beers also could keep an enormous part of the diamond supply off the market. They controlled the market so completely that when they got together with the wholesalers in New York, and the buyers would go to these sightings where De Beers would lay out different groups of diamonds and say, take it or leave it, and here's our price. But over time, you had a few factors. You had a lot of production coming on stream from Russia and Australia, and you've also got artificial diamonds now, colored diamonds that are distinguishable from the real thing only in that the synthetic is more perfect than whatever you could mine from the earth. So diamonds, De Beers has over time lost their iron grip on the market, and again, there's this psychological factor. In really good times, diamonds are going to enjoy more boost from psychological factors than they will from supply and demand.
Rick, anything else you wanted to bring up on our interview today?
Well, like everybody else, I'm just sort of waiting for that top, but I don't have problems looking at the charts and thinking the Dow could still go 2,000 or 3,000 points higher. It's kind of astounding to me that that could happen. And many of my friends who are in the forecasting business are not at a loss to find technical reasons why this market should be trading at half its current price. But I'm just trying to go with the flow, not get in the way of the speeding freight train, and well, I'm happy to see the market go up because I've got my house listed for sale, and I feel like I'm getting an opportunity to cash out at a very good time.
Rick, thank you so much for chatting with us.
Always a pleasure, Jim. Thanks for inviting me on.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. You're listening to HowStreet.com radio. If you have any questions for the show or our guests, you can email us at info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.